Rate cuts come in yesterday, of course, with Chair Powell hitting 50 points. And of course, now the explosion has started to hit the markets, and we're starting to see some moves, not only in Bitcoin, but also the altcoins. We'll break it all down for you guys today. My name is Paul Barron. Welcome back into Tech Path. I do want to thank our sponsor today, and that is Tangem. If you guys are looking at self-custody, this is the place to start. And the cool thing with Tangem is it's very easy to use and super secure, has a great app that works with the cards themselves. Make sure and click the 3-card set when you want to start, and you can start on your self-custody journey today. And it's very easy. You can put a ton of tokens in there, get some of your stuff off of the centralized exchanges, and start your self-custody journey. I want to go to a first clip here, and this is going to get into a framework of what's happening in the markets right now. None other than Mr. Cramer.
Jim, let's get to this opening bell here and the CNBC real-time exchange and the big board. As we see quite a bit of green, looking for some opening numbers here. Jim, it's interesting, you know, the implied move yesterday was 1% or more. We only got 30 basis points, so we are making up for some lost time yesterday.
Yesterday was really weird because you had stocks, you had Mag 7 fly instantly. Then you had the fellow traveler techs, particularly semiconductors, fly and soar. And everything, every point was given up, and then they started dripping down. And then at the bell, it accelerated. David, who were those people who were trying so desperately to get out of stocks now that they're up? What was their game plan? I want to get into their heads, their silly heads.
Couple other points right here. Is Kobe Easy kind of hitting on this. Breaking stock market futures soaring to new record highs. Traders, of course, react to the first Fed rate cut since March of 2020. And the S&P and NASDAQ now are up over 20% this year. 20% this year. That's insane returns. Most people haven't seen those kind of returns in their entire lifetime, much less one single year. And of course, Polymarket comes in and pretty much nails it. Polymarket users outperform economists in predicting the U.S. rate cut. I talked about this a little bit yesterday on the live stream, and that is that Polymarket users seem to have a little bit more savviness around not only culture, but what's really happening within the markets. With that being said, right now, things not looking too good for Mr. Trump. If Polymarket is right, now again, it's still very early, but about 45 days or so left before we get to the election. We'll see how this plays out. All of this will have an impact on the market, so be ready for a lot of movements going over the next 45 days. Official Fed rate kicked off the interest rate 50 basis points, whether we get another 50, but we could see a good scenario that plays out through the end of the year. This is only the third time in recent history that the Fed has started a rate cut with 50 basis points. Previous 2 times, the economy crashed on that. Well, I think the last one was 2007 when we saw that same kind of scenario. Interestingly enough, did you know that these rate cuts and these scenarios have always happened, well, not always, but predominantly have happened in election years, which I did not know that until yesterday. All right, so I want to jump over to one more clip here. Well, actually, we got a couple more clips, but this one is getting into around the message, because this is where it gets might be a little bit conflicting for both the traditional markets as well as the risk-on markets. Take a look.
What was your take on the message today? Did you also think it was muddled, as Michael had said?
I don't think it was that muddled, but what immediately caught my attention was that forecast for the unemployment rate for this year, right, jumping to 4.4, and that's why I think they lower rates by 50 basis points, because they see that weakening in the labor market somewhat coming through, and they just don't want to fall behind the unemployment rate, so to speak. Because as I said before, like once it goes up, it keeps rising. You know, you would have to slash rates really aggressively to get ahead of that. On the other hand, there was also a message about, hey, yeah, the economy is in good shape. It's not really an issue, but we want to keep it that way. And so that whole forecast was the soft landing. And by getting this unemployment rate down over the course of next year, which goes from 4.4 back towards 4, yeah, you need to front-load rate hikes. So I think, rate cuts. So I think the other interesting change was the median for 2025 going down 100 basis points, basically saying like we're going to front-load this easing cycle if we have an issue with the labor market. I think that was part of the pushing the market at risk on sentiment of like, yeah, Fed, you're drawing a line in the sand on unemployment.
Yeah, and I think the question here on unemployment is, was this too late? I believe it might have been. In other words, I think we're going to continue to see those kind of numbers, which could lead to the Fed actually accelerating rates even further. Wonder what that will continue to do to the markets if we do see that happen. Bloomberg, of course, says, don't worry, we are in a bull market. Take a look at this clip.
we're in a proper bull market. And what I mean by that is that we shouldn't get too bothered by the short-term moves. We're going to have more fluctuations in the week ahead. We might sell off tomorrow. It does not mean that we're not in a bull market. The reason that we're in a structural bull market is that we have the most important central bank in the world pumping another injection of animal spirits, of stimulus into the arm of an economy that is doing absolutely fine. Atlanta Fed GDP now just ticked up to 3%. Growth in the US is likely to be this year as good as last year, if not better. Growth this quarter in the US is likely to be better than last quarter. Growth this year globally is likely to be better than last year. I don't know where this slowdown is. There are certain sectors, if you look for them, sure, hiring slowing down from a crazy level, retail sales are slowing down from a crazy level, but overall growth is good, and yet central banks are easing. This is bull market conditions. It does not get much better than this. Now, it's not a short-term call. Of course, things are buoyant today, but it's not saying they're going to continue at this pace, because they definitely won't.
All right, so that is the question. I think that the narrative that we're seeing right now coming out of Wall Street is still cautious to a certain extent, but I think everybody's a little bit cautious just because of the political environment that is really kind of in front of us. And I think that will be the factor going forward as we get into the next potential really big moves, at least in the crypto markets. And I would agree with that analyst as well, is that we are in bull market territory for sure. Now, there are some opportunities here in small caps, and Tom Lee has talked about this many times on our show in clips that we've broken down, and he goes into it a little bit further of why this could be a big move. Take a look.
What the stocks do between now and, let's say, the election day, I think is still a lot of uncertainty. And that's the reason why I'm a little hesitant for investors to dive in. But if I was going to advise where to be positioned, Carl, it's exactly what you said. It's cyclicals, which is industrials, financials, and small caps. I think tech and Mag 7 still keeps up with the market. And that's why if someone owns it and they have tax implications, I wouldn't sell it. But for all these folks that have been sitting on defensive positions or thinking the Fed cut was going to be too late and the market was going to, equity markets were going to fall, I think those folks have to allocate into cyclical stocks, especially small caps, because they are not only sensitive to the cut in rates because of variable rate debt, but they're going to benefit from the cyclical boost to the economy as mortgages. The cost of mortgages drop, auto loans, credit cards, the lift to the consumer, potential M&A, all these are big tailwinds for small caps.
And I would agree with that. If you kind of align what's happening in the main securities markets, and if you do believe what Lee is talking about there in terms of small caps, well, it correlates very well with altcoins. If you look at it holding at 33 right now, and if you compare this out, this of course goes all the way back to early this year when Bitcoin had topped out around 70K plus. And if you look at where it slid, are we at the bottom? Have we clipped in underneath? Because this is kind of where the no-go zone has been. Are we in that position right now where you're starting to prep right as we start to break out into altcoin season, which we need right there above that 75 mark, which kind of gets us going. So this could be perfect timing. You know, you've got Breakpoint happening, a lot of things happening with the Solana ecosystem, along with other ecosystems that are starting to percolate. There are some opportunities here for sure. Let me just final up here with the total 3 chart. This is just, of course, if you guys don't know the total 3, this is all of crypto without Bitcoin and ETH. And you look at this channel starting to break through. Could this be the zone right here where we are getting ready to break into an opportunity of where altcoins could really start to accelerate back up into this maybe close to $1 trillion in altcoin value? So there's a lot of opportunities here, I think, starting to brew. Part of this will be revealed at Breakpoint, of course, happening along with Token 2049. But right now, tomorrow, Breakpoint is going to begin. We'll see a lot of different announcements. We already put out one video that kind of gives you a little bit of insights of what they announced over on there. So make sure and check that video out there. One of the big announcements was the Seeker phone, which is the Saga 2 that everybody's been watching for quite some time. It is now released. They actually had the device. So check out that video because it's a pretty good breakdown of what everything they're doing here. Other things that are starting to move within the Solana ecosystem is some of the meme coins. So keep an eye on PopCat. This is one that we are watching. It is already up considerably. So 34% just is on the 24. And of course, that's already continued to move. Another one is Bonfida. Now, FIDA has been on our marker for quite some time. We've talked about it probably over the past 6 months. That's another one that has been on the move as well. And then the winner, I think, that really everybody needs to take a real close look at, and this is one we've continued to track here over the last several months. And here recently, before this most recent move, was SUI. So SUI continues to hit some major potential here, and this could be one that could be the Solana of this bull run. So we're watching this one very, very closely. SUI blockchain, major contender. Now ex-Goldman is kind of pointing at this. There's a few points to look at here. Blockchain often compared to Sol, showing signs it could be one of the leading networks, maybe the chosen one. We'll see how that plays out. Upcoming pilot fish upgrade is expected to push its scalability further. Remember, it's faster and cheaper than even Solana, which is surprising. A friendly name there, of course, is Raoul Powell. He's particularly optimistic about SUI. Full disclosure, I think he's involved with them, so that is one thing to take away from that. But the key here is getting developers, building in a USDC component with integration. That's another factor. But all of this is only pointing to one thing for SUI, and that is more adoption, most likely a higher price. So we'll continue to watch this one very closely. All right, so I want to take a quick look at the SUI chart. If you look back just in a short framework right now, back here to August 6th to where we are trading right now, almost 150% move right there on SUI. So this is one that we've been tracking for a little bit. I still like this one if you really start to stretch out and look at where its potential is, and if it has a performance capacity that is greater than its most recent high, this one right here could start to be a winner in the altcoin space. So we're going to continue to keep a track record on where that one is going. Make sure and stay tuned right here. If you guys are not following me out there on X, make sure and do that. It's just @Paul Barron. We'll catch you next time right here on TechPath.